The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hello, welcome to the COB, your wrap of the day in business and markets. As you just heard, I'm Nadine Blaney.
And I'm Juliette Sarli. Let's have a look because we had a good day today, Nadine.
We did. We
After
had a
two
very
sessions
nice
of
day.
losses. Yeah, of course we woke up to the Fed news, the inflation data out of the US as well. Powell signalling only one rate cut this year now. But some good buying coming through from pretty much every sector on our market today, except for a bit of a dip, I think, in some of those big mining and energy players.
And when you consider, we saw the Nikkei, it has closed down by about 0.25%. Markets in China coming under a bit of pressure. Yeah, I think we did all right today. And of course, perspective is everything. We have had a couple rough sessions so far in this shortened trading week. Thursday already, Jules.
It is indeed, which means tomorrow is Friday. What are we looking at?
We didn't talk about jobless rate here. So 11:30 a.m. we did get that read on jobs. So really coming through and proving that yes, while there is not quite the same amount of heat in the jobs market, it's still tight. It is.
So I had a really great chat with Bjorn Jarvis, and that conversation is up online now. And what I found fascinating, we know this is always volatile, always seasonal, and we know this ourselves. Pretty much everyone in our office was sick in May, at least one day, right? The impact of the seasonal flu on on hours worked played through into particularly that underemployment in youth and in the part-time employment dip.
Right.
And he said that could be a trend as we head into potentially a really bad flu season. Yeah,
and I was speaking with Nick Twidale earlier today, and that interview is up online. He talked about some of the charts in terms of currencies in relation to the US and Japan. Don't forget we get the BOJ tomorrow and the Aussie. But he was saying anecdotally, sadly, you speak with so many people who are losing or have lost their jobs. So it's a very hard one to sort of get your head around, but at 4% still historically low. And Paul Brennan from Suncorp, the chief executive, said this is going to bring out a hawkish RBA most likely when it meets next week.
Indeed. All right, the miners melting a little bit today. Some big losses coming through from the likes of BHP and Rio. Interestingly, those uranium players, though, looking really good today. But let's have a look at some of the big mining stocks.
Uranium was trending on X, so that's my first indication that the price has gone up. But BHP is off by about 0.5%. In fact, I was reading that the metals and mining index, it's an index that Reuters tracks. It is at its lowest level since, I think it was the end of March. So we've seen this, prolonged selling, even as we're watching iron ore rebounding today in China, because we have had a bit of news coming through in terms of a little bit of stimulus to get that property sector moving again. So perhaps we'll see that reflected as we move toward tomorrow. But it's been pretty dismal in mining and the materials space
All right,
this week.
quick look at the banks, because NAB actually hit its highest level since 2015 today, up 0.8% above $35. A quick look as well at what we're seeing in the healthcare space there.
There's nice to see CSL up by 2%, doing some of the heavy lifting when it comes to the overall market. Health check there, we could say, feeling all right.
All right, let's get to our guest. Mathan Somasundaram from Deep Data Analytics joins us. Mathan, I guess just your overall big picture macro take, given that we did hear from Powell and we had jobs data.
Yeah, it's the two major incidents happened at the same time. Historically speaking, every time you have a non-farm payroll, inflation update, or a Fed update, the market goes up, usually through the techs. And we've had two of those data points in one day. So it was almost certain that the techs were going to run, and they did. So I think it wasn't as impressive in the context that in the last 12 months, the US inflation is pretty much in a tight trading range. So we probably had 6 months below the current level and 6 months above it. So it's not falling down, it's not going up, it's pretty much going sideways. And the Fed was right to point to that and saying, well, it's getting a bit sticky and it's still elevated. So they've downgraded. The market expected to downgrade to 2 cuts. They downgraded to more or less a 1 cut. Mind you, the market's not buying into that. They're still hoping for 2 cuts. So we've had that play out. And then we had the local employment data. Employment data has been kind of confusing around the world. We've seen this in the US as well. Non-farm payrolls, massive beat. Unemployment went up in the US. Here, our unemployment has ticked up from mid to threes to 4 now. But, if you look at it in historical terms over the long term, around 5% plus is probably the long-term average. So we're way below that. So employment market is still pretty strong. As you guys were discussing, there are people changing jobs, mainly because I think cost of living, people are looking for higher pay. And you can see at the lower end of the wage, you can see it in fast food places. They're all advertising for workers and they just can't get enough. So there is a weird employment market, and that's just not for us around the world.
It is true. So as an investor, I spoke with a guest today who said that in a period of extreme innovation, which is what we're in his view, in terms of AI, improving productivity, improving margins at some of these top companies, particularly in the United States, that this is not, looking like bubble territory. This is not looking like .com 2.0, that this is, these valuations of some of these top companies in the US are justifiable. What do you say to that?
Yeah, I was around in 2000 at Citi, and I remember everyone telling me the same thing. Look, it just comes down to what you're willing to pay. And when the market stops willing to pay for that, then we all look back and say, gee, that was a bubble. And that happens over time. And if you look at the data and you look at companies and say, how far into the future are you willing to pay? That's where the question comes in. I think, there are some of them, the logic makes sense on the outlook. AI is going to be massive. As with most other things, when we found, when the internet came in, Cisco had the same kind of run. Everyone thought Cisco was going to be there forever and no one else was going to compete. We had the same thing with Tesla. Then someone like BYD came around. And so there will be competitors coming in. So as a particular company doing a particular thing for a particular technology will not hold its margin forever and will not hold its uniqueness. Even the great Apple is getting threatened by Samsung. So they will always get challenged. And people pay, when you pay 10 plus years of growth already, then you have a risk. So I think horses for courses. We're more than happy to pick stocks that are going to deliver in the short term. We're not buying stocks that are paying 10-year growth already. So there are plenty of opportunities in the market. I think there's a place for people to buy growth stocks. There's a place for people to buy value stocks. I think time will prove which works out.
Mathan, what's your take on, I guess, the big gobbling up of conglomerates as well? When you look at the ACCC being worried about Sigma and Chemist Warehouse, there is, according to one report, 10 postcards and 13 stores where if they joined, they would exceed 50% market share. But we've already seen such, gobbling of a lot of these companies and Australian companies going overseas as well.
Yeah, going overseas, Australia doesn't have a great track record. So whenever someone does well, we all jump on it. So our healthcare sector has been one of the better players going global. On the I suppose the pharmacy sector, it's a protected species. It's a sector you can't just jump into. So through acquisition, if you consolidate power, there's a real risk. This is the kind of thing that you look at, imagine it happened in the supermarkets. Would the ACCC allow it? There was always going to be a question of that. There's anyone who says there wasn't a risk is kidding themselves. There was a risk, but I think they're going to play through this. I'm not sure how it plays out. I assume everyone's looked at the risk beforehand. It is going to be a tricky one because there will be, I suppose, market power will transfer to the players because they'll have dominant supply, I suppose, control over the market. So in that context, you have to worry. But in Australia, we have that problem. We got dominant players in most sectors. And, if you wanted to, think of it this way, if you wanted to buy sporting goods, there's only a few places you can buy apart from online. If you wanted to buy groceries, there's only a few places you can buy. So, that's the bad thing about Australia is that, it's a great country, but because we have a spread population in certain cities that dominate the population size, there's only a few players, everything. We've only got a few banks. We've only got a few airlines. We've only got a few supermarkets. So we do have that. So I'm happy that ACCC is putting the pressure to make sure things are clean. But unfortunately, that's a trend that in Australia you have to live with.
So I don't know if our viewers, listeners know that you put out a daily newsletter called The Sunset Strip, Mathan, but you always start with a cartoon, most of the time from Hedgeye. You think I don't read these things? I do. Have you picked it already for today?
No, it's actually funny when I'm writing the letter. I mean, I just write it off the top of my head and what's playing out in the market, and you get a fair bit of banter through Twitter and so forth. You get all these ideas, and suddenly you come up with a catchphrase while you're typing up, and then that kind of leads to the picture. And Hedgeye does so many pictures, so you can go through the historical stuff and pick up one that matches your sentence. So it kind of works.
So you don't know what your catchphrase for today is going to be yet?
I suppose it has to be something to do with the Fed. I mean, the Fed is everything at the moment. It's kind of sad, but we're stuck with the Fed for at least a few decades.
I don't know about your newsletter. Juliet at ausbiz.com.au, please.
You know you're going to get a lot of emails now.
Oops. Let's rewind. Gosh,
that's okay. It's not been a hard code to crack right from the beginning.
Maybe they don't know how to spell Juliet. All right. I'm getting told that I'm silly, even from our director. All right, Mathan, have a good one. We'll see you next time.
See ya. Sorry, that's very cute.
I was just like, I would quite like to get that newsletter, but maybe I could have just messaged him offline. Anyway, let's get to the top corporate stories. NAB obviously hitting that highest level since 2015, $35.03 there. Sigma was also in focus, which obviously we just touched on there. And then those uranium stocks looking really good. The ASX, of course, after the update to investors today and saying that technology costs are hurting its bottom line. That was also...
Yeah, the ASX, of course. So it had an investor strategy update, and look at that. I mean, that is a big fall for a company like the ASX, off by 8%. When you consider that we know a lot of the bad news around it, particularly when it comes to the CapEx spend that's needed still to get that chest replacement up and running. So we thought we'd make it the stock of the day. We spoke about it with our guests, Daniel Ortiz from Lincoln Indicators and Francesco De Stratis from Ward Minute.
You've mentioned, they keep putting up prices to customers. Customers are upset. They've burnt a lot of people on the trading platform as well, and traders now are steering clear of the ASX for the RBA cash rate, the interest rate trading, because of what happened with the RBA a few years ago. So firm on not putting up rates, and then of course leading to the largest trajectory of rate rises in decades. So there's just a lot of things going against ASX right now. It's not just management, it's people steering away from their platform on everything really aside other than ASX stock trading. So you look at the settlements of fixed income, like I've mentioned, that's been a big drawback as well.
Not all that surprised by what's going on. I'm more surprised by the way the market regathered on the ASX after that failed investment in blockchain. So it'll be interesting to see where they go with that technology. They've announced that they want to move to T+1 and a number of other things as well. But A, they're very slow at their evolution, and B, their success rate's not that great either. There's not just blockchain, there's other things in the past. So look, I'm not a fan. We have an underweight on it. At some point though, it's going to look good value, but as Daniel mentioned, it's on a fairly steep valuation at the moment.
All right, let's have a look at the market leaders on a day when we were higher. A2 Milk looking pretty good. Nanosonics, Life 360, Polynovo, National Storage. I mean, we also talked on about the fact that WiseTech today was nearing $100. NAB had a really good run as well. So there's some of the other stocks that were in focus.
The only one that's got some news associated with it was National Storage, which did reaffirm its FY24 earnings per share guidance and its distribution policy, and it's establishing a joint venture fund with GIC. So there's a bit of news there if you'd like to go have a look. And we are looking at some of the laggards right now. With the ASX, we just talked about it, and I guess money going out of some of these names into perhaps some of the uranium names. But while we're on the miners.
Yeah, we're just hearing that Fortescue has lost another senior leader. Julie Shuttleworth is leaving the iron ore miner and the green energy ranks. She was recently in charge of iron ore operations in Gabon, which is in Africa. She's been sort of, a favourite of Andrew Forrest, but apparently she had a farewell party yesterday saying she was grateful for her time and leaving to spend more time with her family.
Interesting. All right, let's get across some of the small end leaders. You can see it there. Bubs had an update out today, doing quite well, up by 16%. Retail Food Group as well, up by 16%. I'm just going to look to see if there was news with Retail Food Group that we missed. No, not that I can see. Findy, it had PYC Therapeutics and Ardea Resources, but there's always the laggards.
Yeah, and there we are, mainly the mining space. I mean, we touched on the weakness in that space today, apart from those uranium players that were looking good. All right, tonight, okay, the Fed is out of the way. We get core PPI, initial jobless claims, and Treasury Secretary Janet Yellen, who those of us who have been around long enough remember when she was the head of the FOMC, she is going to be speaking tonight.
So we're expecting to see falling gas prices or fuel prices, to see the PPI just posting a very small gain in May. Jobless claims should remain at a low level. But also, we missed this one, but the FOMC's Williams is also due to speak. So now that the FOMC blackout is over, we'll start getting a lot of these voices.
Again. Yeah. Oh, they love to chat. All right, tomorrow, as you mentioned, the BOJ coming through with its policy decision. We also have April industrial production from Japan and New Zealand manufacturing PMI. So looking like it's going to be, I mean, it's never a slow day, but not too much happening in Australia tomorrow, Friday, the end of the week.
Yeah, so we saw Asian stocks rallying with a few exceptions, and we were one of them, of course, with the COB Australia index closing 0.4% higher. And we saw the S&P ASX 200, really moving in lockstep, 7,749 being the final figure there. And Juliet, we've got E-minis in the US positive right now as well.
All right, well, that is it for Thursday from Ausbiz. We'll be back from 9:40 Eastern tomorrow, Friday.
See you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.